So this is what I wanted to touch on today, that you could have been up 25% today by risking 2% last night. USD might buy. Oh, oh, olha, olha. Oh, olha, hold me. Shem, get a drink of water for my boy. Get a drink of water for my boy. Somebody, please. Jesus Christ is looking good for buys, boy. Jesus Christ. Whoa, this looking good. All right. Who is trapped? Somebody get some water for me now, please. Who is trapped? We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 reasons, I guess you could say. Between 10 and 12 reasons for retail traders to sell it. And I am almost certain that they will. GBP USD possible buys, people. All right. GBP USD possible buys, people. Right? I continue. Gold. Gold might also buy, honestly speaking. All right. Gold might also buy. I'm not going to tell you to take it. I'm not going to tell you to take it. All right. Sham, later, bro. All right. I'm not going to tell you to take it. But I feel gold might buy. Because gold already get rid of all of the sellers who are selling. So we'll see. I know. We'll see. The pair. Let us now go to the pairs. The two pairs in particular that I want to talk about today, and that's both GBP USD and gold. Right? And we'll talk about gold first. All right. Now, as you know, I took these both trades, both GBP USD and gold. Right? And I'll start with gold because GBP USD is actually the star child today, even though gold went way more than GBP USD. I did say last night, and you will see, I did say that gold most likely is to buy, but I did not recommend an entry, right? Because if you don't know what you're doing, gold can hurt you really bad. Again, literally, as the class finished, I just happened to go and draw this up quickly. And I mean, look at that. I mean, come on. The dealer had already, and one of my reasonings for this is the dealer had already gotten rid of all of the buyers, right? He got rid of all of the buyers who were buying off of these support. And then the last one that I had drawn, you would see on YouTube, my last video on gold, you would see where he had gotten rid of all of the buyers on this last support, and he take all of them out. Gold long term is a buy. Listen to me. Gold long term is a buy, which means that in order for the dealer to buy gold, he needs to get rid of all of the people who are correct about the direction, aka the buyers. So what better way to get rid of the buyers than to sell the market, get rid of all of the buyers, and then make the sellers feel like it's actually going to sell, and then just buy the market instead. This is exactly what happened on gold. And if you really pay attention, look at that entry. Right? And if you go and you look, on the post and you'll see it. Right? I'll make it visible in this. Right? You'll see my entry is literally right down there. Right? There's your push, there's your pullback, there's your accumulation, and it literally just went. Gold literally went ultimately from my entry about 200 pips. Again, about 200 pips. It's currently floating at about, gold is floating at about 120. It went 200. My stop loss in profit obviously is currently from my entry about, I'll tell you just now, it's about 50 pips in profit. So worst case scenario, I go home with about 50 pips on gold. Right? Realistically, we only wanted 10. Best case scenario, it keeps climbing and I keep trailing it up. If it is, going to keep going up and we can keep trailing it, guess what? We'll keep trailing it and we'll keep making money off of it so long as it doesn't take us out prematurely, right? But this trade, had you closed at the ultimate high of this trade itself, would have been a risk to reward ratio of 1, because we're using a 10 pip stop loss, 1 to 20. If you risk 1%, this trade alone would have given you 20% back. Remember, we could have made 40% on gold last week. Today, being only Tuesday, you could have made 20% on just this trade. And I know some of my students, I know some of you would have taken this. I know it. I've seen it, right? One of my recent students, absolutely beautiful. Absolutely beautiful. Congratulations, Rivka. Right? I hope and pray that you're still holding this thing. I really do. I really do hope that you're still holding this thing. Right? So yeah, so that's good. But essentially, this one trade is the equivalent of very good. You are still in. Congratulations. I see one of my students still in from last week. I'm guessing you would have bought somewhere down here, right? If that's the case, then you'd be up. Whoa, Jesus Christ, probably well over our 50% profit, right? The low. Okay, well, personally, I'm not sure why I would have bought from the low, but I digress. All right, this one trade is literally up, as I said, about it's up about 12% right now. 12% right now. It went ultimately about 20% up. All right. If that not listen, if that is not proper risk management, I don't know what is, because we risk one. We risk one. Remember that. We only risked one. All right. Let's now go to the star child of the night. All right. And you'll see, all right, because I will be posting this on YouTube. You'll see how I got on when I saw GBP USD. Oh boy. Oh, I listen. I've been saying this. I've been saying this. I've been saying this. If this is not, if this is not an obvious setup to trap retail, then I don't know what is. Right? This trade, again, we risk 1%, and this trade would have ultimately gone about 55 pips in your favor, which is about 5% gain. Right? 5% gain. This would have gone an average of about, what is that? So 576. This would have gone an average about 30 pips against retail. All of the retail traders who sold at these highs here. So maybe they didn't sell at these areas, maybe they sold at one of these two areas. We are assuming that they sold right at the literal high, which is unlikely, but most of them would have sold in these areas here that retail are so interested in, because these are areas of interest for them, right? These are areas where 1 tap, 2 taps, 3 taps to resistance, 4 taps to resistance, 5, 6, 7, 8, 9, 10. 10 taps or more, maybe even more. I said 12 last night. It could be 10, it could be 12. There are plenty. That's the idea, right? The reality is there are plenty taps that retail traders would have been looking for to sell GBP USD last night. And this one in particular had our rules to enter. Look at it. It literally had more or less everything that we wanted. It had the push, it had the pullback, it had the accumulation. And right there where we entered, that's absolutely beautiful. Go look at my entry. You would see it in the video as well. Go look at my entry. It's more or less the same exact thing. All right. 10 pip stop loss, absolutely safe. Nothing would have come against me. I risk 1%, right? Or assuming I risk 1%, I should say, you would get back at least about 5%. So between gold and GBP USD, you risk 2% because you risk, let's just say you're assuming you risk 1% on GBP USD and you risk 1% on gold. That means you risk 2% collectively last night for Asian. That means this morning you will be up. It's literally 7:30 in the morning on Tuesday the 9th of February, right? That means this morning you'll be up 25% on your account by risking 2%. Let's do a quick calculation, right? You would be up 25%. You'd have 25% reward by risking 2%. That means 25, 2 divided by 25. That's not 25 by 2. That means your risk to reward ratio would be 1 to 12, essentially. 1 to 12. when you add these two trades together, right? Your risk to reward ratio on these two trades is 1 to 12, right? Obviously, the average risk to reward ratio. Come on, man. Come on. This was a no-brainer, right? I could have told you, and I said it. You'll see in the video, I'm gonna edit it in a real nice and stuff. You're gonna see in the video where I said, listen, I asked somebody to bring me a glass of water because I couldn't breathe last night. I couldn't breathe when I saw GBP USD like this. Now, don't get me wrong. I mean, I could have been wrong, and I said it. I could be wrong, but I mean, I've seen this before, right? And I speak about this all the time, all the time, all the time. That you see, when you see stuff like this, the retail traders who think like the vast majority of retail traders who just blindly trade resistance, and notice the word I'm using, the adjective that I'm using, blindly. They just literally take their line and drop it right here. Boom. And as they drop it right there, they say, right, that is resistance. Sell it. That's it. It comes back again to the exact same, this exact same thing that I've been speaking about from since day one, that you're building your house with one element, you're building your house with glass. How do you expect it to stand up? One person pass and throws a stone at your house, it's going to shatter because you're not using all of the elements. You're not using wood and concrete and steel and, fiberglass and glass and bricks. You're using one thing. So your analysis has holes in it, essentially. That's the problem. And we know that the vast majority of retail traders, the average of them, all right, is even recommended. If you go on YouTube and you type in how much should a forex trader start trading with, they'll tell you you could start with as low as $50. Right? And you ask, if you go and you survey people and you ask, a lot of people tell you that they start with 100, 200. You understand? They start with 300. Some people tell you 5. Some people tell you 1,000. So we use the average between 100 and 1,000. This is 30 pips against retail from the high. From the high. If we counting from where I entered, this is about 50 pips against retail. Because we are assuming that a lot of retail wouldn't enter at the highs of this resistance because they don't know about waiting. They don't know about patience. They don't know about, relaxing. You understand? They don't know. They just know that when they see price hitting resistance and price hitting support, they close their eyes. They're playing hide and seek. They close their eyes, they put their hand over their eyes and they count. 1, 2, 3, 4. Right. Ready or not? This is how they're doing it, eh? Ready or not? Here I come. Boom. And that is where they drop it. That is where they enter. Literally, they close their eyes and do that. No, you're laughing, but I'm serious. This is how vast majority of traders trade. And I mean, I might sound cocky, I might sound whatever, but I know to myself that I'm not guessing. I'm making an educated analysis on why something is happening. And don't get me wrong, again, I say this all the time that I could be wrong. I think I even said it last night, I could be wrong. But the beautiful thing is, if I am wrong, I lose 10 pips. If a retail trader who is the average, let's think of the butt of the joke, all right? Who is the average retail trader? We know that 90% of traders lose 90% of their money within 90 days of trading, all right? Those are the traders that either they don't use any stop losses at all, or they use the widest possible stop loss, 100 pips, 200 pips. I saw one of my students telling me that one of his friends uses 150 pip stop loss. That is absolutely insane, because if you use an 150 pip stop loss and you have a 4,000 pip take profit, that's something different. But the vast majority of the retail traders can't hold for that long because there's a fear, the fear of staying in. 4C. There's FOMO, which is FOMO, the fear of missing out. There are other fears. There's one called FOSI, FOSI, the fear of staying in. You see 30 pips profit, you close it. So you have 150 pips stop loss, but you're closing when price goes 30 pips in your favor because you're battered. You're always losing trades. So you know what you do? Anytime you win anything, you take it quick, because you don't want, you don't want to lose that money that's on the table. Hold the damn thing. Hold it. These two trades alone, GBP USD and gold would have been up about 25% had you risked 1% on each trade last night, ultimately risking 2% collectively. You risk 2%, you get about 25%. Floating, meaning we ain't closed these trades yet. I still have both of them open. Meaning if they keep going, we keep making more. If you have these things open and you risk 1% per trade, you could keep theoretically making more. This is how you trade. This is how I try to teach people how to trade. I don't promise that if you join my program or whatever that you're gonna be a millionaire, but I'll tell you that I try to take you away from this retail trader thinking that we do that a lot of people are accustomed to doing, that you just draw random trend lines and just buy them. By no means am I saying trend lines don't work. They do. Obviously, the trend line has to work in order to induce the people to take the trade in the first place. That has to work. But what I don't advise is trading the trend line blindly, because once you're doing that, essentially you're making the same exact choices that the retail traders are doing. And when I say retail traders, I don't mean that I'm not a retail trader. Of course I am. I'm just a normal trader that I can fund my account via a broker. But I don't think like the vast majority of retail traders. And that's why I buy resistance and I sell support. Think about that. That's what I did here. This is resistance on GBP USD. But I bought it. I didn't sell resistance. I bought resistance. Look at that. There's nothing else in sight. For GBP, there's nothing else in sight. Nothing. So that is fresh resistance essentially. There's nothing else. Look, it have nothing. In other words, if GBP USD has to go anywhere, the next place it most likely has to go, in my opinion, would probably be here. Probably here, which is about, what's that? About another, what's that, boy? Probably another 3,000 pips, 300 pips, sorry, if I'm seeing correct. Yeah, another 300 pips, if I'm seeing correct. All right, and I could be wrong about that too. I'm not afraid to admit that I'm wrong. But the reality is, stop thinking like the vast majority, right? They say in order to achieve what nobody else has achieved, you need to think and do things like nobody else would do, all right? Operating like the majority allows you to literally stay getting results like the majority. You need to operate like the minority. Think like the dealer. I trade the exact same way that Forex trades. The exact same way. I mean, don't get me wrong. I learned mostly what I know from Forex here, right? So much so that I've become a teacher for Forex here. People oftentimes ask me, well, you don't trade M's and W's, because M's and W's aren't the above all and end all. Sometimes at the highs, just like on GBP USD here, you're not going to see an M or W because price is not ready to reverse. Learn to read the room. Learn to read what's going on. If it was an M, trust me, you would know. And you'd probably know because it would not have given you an opportunity. You have to be in the moment right there waiting for it. And that's why I stopped trading M's and W's. Unless they're really, really clear. Am I saying they don't work? Of course I don't. They do. They absolutely do. Right? But in order for you to catch that M and that W that you really want, you have to be real good. You have to backtest like whoa, you don't have time to backtest. I understand. You don't have time to backtest how you should be backtesting in order to be able to catch those M's and those W's properly. And by no means am I saying that it can be done. Of course it could, but a lot of us don't want to do the work. Remember, I say that the treasure you seek is in the work you're avoiding. So this is what I wanted to touch on today, that you could have been up 25% today by risking 2% last night. Interesting, eh? Just two trades. And let's just look at this. I was right about mostly everything else as well. So had I taken all of those other trades, what would I be up? How much would I be up? Obviously, I would have to risk more, but how much would I be up? In other words, I had choices. This is why when I was speaking about, last week and the week before that, I wasn't having the best start to the week. I had to take a break actually, right? I think it was in January. I had to take a little week off because I was making stupid decisions, right? I think that's how real traders operate. You take a little break and you come back swinging. And just like that, gold last week would have propelled me way into profit for the year, right? Even though I wasn't down, I would have been propelled way into profit for the year. And now this week, just add insult to injury, I'm even more in profit. These two trades would basically account for, about 25 times any losses that I can have. In order for me to give back what GBP USD and gold is giving me right now, in order for me to lose that, I would have to lose about between 23 and 25 times in a row to lose what I've just gotten here because of how my stop loss works. Stop taking 10 steps forward and 500 steps backward. It should be one step forward, right? I mean, one step backward, but 10 steps forward, right? Don't give back what you made. You take 10 steps forward and one step back. That's it. Rather than one step forward and 10 steps back. Don't do that. If I let's just say I close GBP USD right now, I close gold right now, right? Assuming I risked 1%, right? Let's just say that I took a next trade and it lost, meaning I would have lost 1%, right? I lost 10 pips. I'm giving back. Think about it. I'm giving back only 10 pips out of the essentially 250 that I just closed. I have 250 floating that I closed. I have 250 closed, right? You tell me I too frugal to give back 10? I'll give it back. Yeah, we're going on. You want to borrow 10 pips? Do you want to borrow 10 pips market? Go ahead. That's how I look at it. Go ahead, take it. You want 20? You know what? I'll give you 20. You only want 10, but I'll give you 20. Because I'm so confident that I'll have more setups like this. Go ahead. Take 20. Be okay with losing, my friends. Be okay with losing. Right? Be okay. Be okay with losing. And if you're not okay with losing, that is why you're going to keep losing. Because it feels as though the loss hurts way more than it actually should. I lose all the time and I'm very transparent about it. Go check my Instagram. I would actually make entire posts about why I would have lost a trade. An entire post, 10 different slides, because I use the carousel feature where I could pack more information into a slide. I would make an entire slideshow on why I would have taken a trade, why I would have lost. If that's not transparency, I don't know what is. Transparency without actually telling you what my financial situation is, because that's your personal business. I don't want to know how much money you make, and you don't need to know mine. But the reality is, I'm telling you, I lost the trade. I'm being very transparent. I lost the trade. Nothing, no secret in that. So what I want to make very clear is, when you lose a trade, don't think that is the end of the world. Remember, we say that's just the battle. The war is what we're aiming to win. One trade is only one battle. The war is success. And you may have lost the battle, but you didn't lose the war. So because of that, my friends, I think, and again, as I said, I'm going to be posting this on YouTube, right? Because I feel like more people need to see this. More people need to hear about this, right? What I want you to remember, anytime something seems too obvious, anything seems too obvious, it's probably because it's a trap. Think of the mouse trap. Think of the mouse trap, right? Think of a mouse trap, right? You put a block of cheese on the little, the what do you call it? I think you would call it the trap door or whatever. You put a little block of cheese there, a little something sweet for the mouse. Obviously, it's a trap. You're inducing the mouse to come and eat the cheese. And as soon as the mouse steps on that little, he grabs the cheese, boom, snapshot. And that's the end of that mouse. And that's how some traders trade. They are induced to trade. That's exactly what happened right here. They were induced to sell, and then boom, buy. And this is not the first time this would have happened, right? So I really hope that you enjoyed, this quick little session. It's quite early. I don't usually do my sessions this early, but I have quite of a busy day. Take a look at this. I'll give you another parallel. because I did the session so early, I could go about my business not related to Forex and still be making money in my pocket with my phone as I continue my day with my other business. You understand? I'm busy otherwise, and I can continue my day. So long as these trades keep going up, I'll keep making money without even focusing, without even watching it. True trading should, should be long term. You should be looking long term, right? And this is why I'm what you call a hybrid trader, right? This is what that's what you call me, a hybrid trader, where I would really look for 10 pips, but if I have the opportunity to trail it and hold it longer, I will. All right. And to answer your question, yes, I would. All right. I will take a little 2-3 minutes just to check it. All right. Because I mean, realistically, regardless of what you're doing, we always find time to pull our phones out, regardless of, listen, down to even in church, I know people pulling out their phone to check and check messages. All right. Yes, I will pull out my phone and trail it, regardless of what I'm doing, because it is money that we literally working with here. All right. So I really hope that, you enjoyed this. I hope that you learned something. I hope that if you did sell GBP USD, that you learn from this mistake, right? You learn from this mistake. This in particular, GBP USD in particular, is the one that I hope you learn from. Gold, yes, gold was a really nice trade, but GBP USD, we've been waiting for this trap for literally 1, 2, what is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, almost 2 weeks we've been waiting for this trap to finish complete. 2 weeks. But 2 weeks, 25% total. Not bad at all. So my friends, I really hope that you enjoyed this session. I really hope that you learned something. I hope that you move forward, and try to think before you act a little more, right? If you have any questions, obviously you could message me either on Instagram or on Telegram at Ikata Trading. You would see that obviously in the video. And yeah, that's the end of this session, guys. Have a good one.